Hey folks, it's Jim Bunker giving you another video from Street Smart Options. I'm here tonight with Jonathan Sherman, my business partner and the go-to man all about stock options. Hey Jonathan, tonight we're going to talk about a company that you highlighted back in May in our Facebook group. So folks, if you haven't already joined the Facebook group, we're located at facebook.com/groups/Street Smart Options. You can also find us at our website, which is streetsmartoptions.com. So, Jonathan, Baozun is a very interesting company. It's very much like Shopify here in the States for e-commerce, but it kind of has a feel like Amazon. Can you take us through that?
Yeah, sure. Baozun is an interesting company. They are located in China and cater to Chinese companies that want to sell their stuff online. And they offer a range of services, kind of a one-stop shop. And it's a kind of a combination between Shopify and Amazon. And if you're not familiar with Shopify, Shopify provides a back end for companies to sell their wares online. It's basically they provide a website, a convenient website, and it's their own website, it's their own branded website, but they provide the back end. The same with Baozun, they provide the back end, but also like Amazon, they will also wholesale, I should say, inventory and retail the products for the companies, inventory and fulfill. So a very interesting company, and of course China is so large that there's a big market. There's a lot of different companies. I don't know if you're familiar at all with Alibaba and AliExpress, but it's an enormous marketplace, and just goes to show how big China is, the depth of the number of retail companies out there that are looking to sell stuff. So Baozun is an opportunity for the Chinese companies to ramp up their online sales, and they're doing quite well as a company. They're a leader in this area in China. And if you look at, we've been on their website, flashing in the background here, and maybe I should first go over, their services. If you mouse over their services, they have online store operation, digital marketing, and customer service, supply chain management service. So, all the things that we were talking about. And if we look at their chart, their stock chart over the past few years, you can see they went public in 2015, and the stock has been on a steady rise since the late 2016, mid 2016, and earnings and sales have been growing for the company, and so the stock price reflects those earnings and sales. And you can see that the little green bars down here are the volume bars, and volume's been growing on the upsurges in the stock, and then when the stock consolidates, the red bars have been relatively quiet. And then, over here, there was a correction. Some big institution got out, obviously, this big red bar, big selling volume. This is a weekly chart. And then it consolidated again. So it broke out in 2016, and then that was like a primary base, but it was kind of a low price base. So I would only start counting from here in 2017. So this is like a stage one base, and then this is like a stage two base that it broke out of, and this is really a base on a base. It's like a little flat base over here in 2018, and then and the stock had another good earnings report and broke out again of this little flat base. So it's on a steady rise, and so the way to you can play this stock in a number of different ways. It's in a strong uptrend, and in these consolidation periods here, you can get in on like a bull call spread or a deep in the money call option. And since this stock, tends to trend pretty well on breakouts, a deep in the money call option would be, my preference in a good market environment. So, here when the stock is about to bust out here, this volume starting to pick up. It shook out in April of 2018, and then started heading up here, rose over the 10-week moving average, and at this point was probably a good time to get involved with the stock, and that's when we highlighted it in our group actually, and it would have been a good time to get into a deep in the money call, maybe the 40 or the 35, something like that. And the reason you deep in the money calls is because there's not a whole lot of time premium in the deep in the money calls, right? So you can go like 2 months out, 3 months out, and not pay a whole lot of time premium. So you lose that time premium with time, right? Decays, it goes away. So it's, you want to minimize that. And so it's just also a way to leverage your investment, right? Now, if the stock goes south, you're going to, percentage wise, you could lose money a lot faster percentage wise than if you just own the stock outright, right? Because the stock would be maybe a $50 stock, but if you own the 35 deep in the money call, then that $50 stock, you're paying $15 for it instead of 50, right? So if the stock goes up to 65, you've doubled your investment, 50 to 65, and that's what the stock did, right? It went to 65, so you would have, perhaps doubled your 35 deep in the money call. But that's things went right? If things went south, then you could have lost a lot more than just owning the stock. So there's risk, right? It's always risk in these things. So you have to know how to control your risk. And that's one of the things we talk about in Street Smart Options, how to control your risk. It's really important. But so this stock, it was real promising. It consolidated real tightly here in the February, March, April timeframe. It was kind of a base on a base, and it broke out on volume on this earnings report. And you could have got in actually, if you're a little less risk averse before the earnings report, but if you wanted to wait after the earnings report, that was fine. We tend to wait after the earnings report to get into these things because you never know, there might be some goofball, something went on, right? So you get in after the earnings report, and you maybe had a quick double in this thing in just maybe 3-4 weeks on a deep in the money call option. If you look at, I do a lot of research on these stocks, both from the company website itself and also on Yahoo. And if you look at Yahoo, and you can go right to the profile here, and you can read, a little bit more about the company on the profile. We've already talked about it, but they call themselves a brand partner, right? And also you can look at like the edited earnings transcript. It gives you a lot of detailed management talking about the company. This is also on Yahoo Finance. You find the earnings transcript, and you can go into a lot of detail on it, and they tell you all about the company and different trends that are affecting the company and the future and all that kind of stuff. So that's great. And then on Yahoo, the actual quarterly earnings are a little bit delayed for whatever reason. So if you look at the financials on Yahoo, you can see they just have like through 2016 on the revenue here, and you look at the quarterly, and they have this quarterly report here. But if you go to the actual website, you can get all these stocks have investor relations sections. So if you click on investor relations, and you can get the financial information, and you mouse over financial information, and they'll have the SEC reports, and this company actually provides the quarterly and annual reports, which is handy. So if you click on the quarterly reports, you can then just you can dig through the numbers, and this is the quarterly report here, and I already have it pulled up over here. So you can dig through the numbers, and you can see look at the balance sheet numbers, which are fine on this company, and then you can look at the earnings reports and the revenues. You can see revenue's been growing, earnings have been growing. So it's a healthy company, obviously, and a lot of opportunity. So anyway, so just to sum up, we found Baozun on a stock scan, a technical scan, looking for volume and price. And then we dug into the company from a fundamental standpoint to make sure that we understood the company, that we saw that it had promise and could trend, because companies with promise and that people can build an expectation on, which can trend in the market. And then we got in, we tried to time it right. So we got in right after the earnings report, right as it's emerging out of this little basing pattern here, this strong basing pattern. And that's the way we do things, and we try to minimize our risk and maximize our gain. So that's it. And in our Facebook group, we talk about these kind of stocks quite a bit, and we're in a trending, momentum-filled environment right now, and so that's the kind of stocks we're focusing on. We're not just about momentum, but right now, because the market's in a bull market, in a rising trend, we focus more on these momentum stocks because that's where you make the most money.
Awesome. All right, Jonathan, thanks for that explanation. And yeah, I can definitely see what you're pointing out there on the chart, and how you're doing the research. So folks, again, if you haven't already joined our free Facebook group on Facebook, we'd really like you to do that. And again, that's just facebook.com/groups and then /Street Smart Options. And if you do subscribe here on YouTube, if you want to share this video anywhere, feel free to do that with your friends and family. If you do subscribe, you might want to hit that bell icon so that you won't miss out on the next video that we do. So you'll be able to get that timely information about what's going on in the stock market. And obviously, the best way to get that timely information is actually be a member of Street Smart Options. That's at our website, and that's where we actually educate people and help them learn how to make the types of trades that Jonathan did when he was on the stock market. The information that he used to write about when he was a writer for Forbes. So that is it for the night. We wish you a happy day, a happy night whenever you listen to this. And thanks for joining us.